as a founder, I think it's about you to have that vision to kind of look ahead of the tunnel, be like, hey, by the way, I'm going to reach that. You don't like.
I'm truly excited to have Abhijeet Kaji with me today.
Hi, this is Abhijeet. I'm the co-founder of Knya.
He's running a startup called Knya, which is a very fascinating play in the whole medical apparel space, if I'm defining the broad category properly.
It's my job in the company kind of keep looking at numbers on a daily basis. Because we are omnichannel, retention gets even harder. But definitely for an entrepreneur is focus and distraction. Today, my form metric is product. Just have the best product out there. And solution was serious issue. I think that is the real thing.
We'll have him describe his journey and his story better.
Hear more about how to scale a niche apparel brand. This episode
could be for you. Please watch the entire episode and subscribe to the channel.
Hi, this is Ankur. I'm your host for the podcast State of Traditional Marketing, and I'm truly excited to be on the place where I am because it gets me to meet all these amazing founders doing some very important and interesting work. Abhijeet Kaji, along with his wife Manshika, is building this brand called Knya. The name is inspired by a Puranic reference wherein it refers to courage. It's their way of celebrating and honoring the medical professionals. Now, turns out all these professionals did not have a brand to solve for their needs of apparel, neither from a style nor from a functionality point of view. So Abhijeet identified this opportunity. We're already a bit profitable as a brand, and they've had a very, very conscious growth journey wherein the D2C is still a big channel while they're going offline in their own brand stores as well. Let's hear Abhijeet out on how he's building this brand out. Thanks so much for doing this, Abhijeet. Welcome to the podcast.
Thank you so much for having me, Ankur, and congratulations to all of you at WebEngage for doing such good work and supporting, brands in their kind of repeat journey and to service their customers significantly better.
Awesome, super. So, let's just start with a bit around your journey itself, Abhijeet. Broad contours, the choices that you made, and how do you end up where you ended up?
So my background, Ankur, grew up in Bombay, moved to the US, management consulting, came back, then did my MBA at Stanford. Then I was in private equity for a bit, where I actually was looking at a fair bit of scaled brands. And that's when I kind of, realized my love for building consumer brands. Somewhere in between the pandemic, Kanya was born. I launched with my wife, Manshika. Kanya comes from the word Panch Kanya, which is the Sanskrit goddess of courage. Okay. And what better profession to define courage than medical professionals, right? And the thesis was very simple. We wanted to build a brand to celebrate doctors and nurses. In some sense, what Nike has done for athletes in the world, right? Doctors and nurses work very, very long hours, right? Not very well known in the communities that we live in, but doing a 36-hour shift is very normal, right, for medical professions, right? Quick statistics, right? 75% of doctors get attacked at least once in their life. The life expectancy of doctors in India is 59 versus non-doctors, which is 71. They've generally just had very hard lives. They study for almost 14 to 15 years before they earn a decent salary, which many of their classmates, probably engineering college, earned a lot earlier, right? So all these things made us realize there's an opportunity for us to build a brand for medical profession. And what better product to pick than apparel, right? Something that they wear every day and can help them probably perform better at work, right? They're doing life and death surgeries literally, right? And if they can feel a little bit better about themselves and will probably enhance their performance, why not, right? So that's how Kanya was born. We've been around for, I think, almost 3 years now. And it's been a fun ride with a lot of impact. We're primarily an online brand, which we sell on our website and app. But we also have physical stores.
While, of course, the whole lens around celebrating doctors sounds very exciting as a purpose to drive the brand. I'm also pretty sure, being a PE professional, you've done your math around how the space looks, what the numbers look like, and how the headroom for a brand like yours to play would be. What's generally the TAM, SOM, whatever you think of it?
There are crore medical professions in this country, right? And if you would divide this between doctors, nurses, midwives, technicians, medical students, then you also have the BDS, which is Bachelor of Dental Sciences, and you have Ayurvedic, which is BAMS. So broadly, that's how the crore medical professionals kind of frame out. They are ripe for digital acquisition. 75% of them are less than 40 years old, right? And we are kind of building a brand for these one core individuals. So our hero products, our core product is scrubs, and that's where we will be focusing on for the near future as well, because we think there's a lot to be done as well. So I think we've been building that brand out, and I think it's a brand that kind of is reliant on a lot of loyalty, a lot of kind of brand recognition, a lot of trust. So super critical for us.
So I would love to double click on ease of digital acquisition, because typically when you look at segments like this, they're not necessarily segments available on a Facebook targeting ecosystem or similar, right? So how do you go getting discovered? Now, of course, word of mouth and spread will have its own play, but how do you largely solve for discovery top of the funnel at the moment?
So we actually are a very, very organic content focused company, right? I think a lot of brands have kind of spoken on the playbook, but we've actually taken it pretty seriously, right? So our YouTube channel organically has almost 600,000 followers, 6 lakh followers, right? And some of our best performing videos have gotten like more than 6 to 10 crore organic views, organic, right? Without a paid dollar, right? And these are just like very relatable content pieces that kind of young doctors can relate to, right? Having spent time in New York myself, right, and a little bit from the finance world, one thing that I realized was that, in the finance world, we absolutely loved kind of inside jokes, right? We love kind of acronyms, right? We love throwing out like LBO and FCF, and so that make it difficult for the other person to really,
Sure.
understand. I think we as human beings are all the same, right? We all want to kind of laugh at inside jokes. I think doctors are no different, right? They kind of have like jokes which are kind of very kind of nuclear to their community, right? About medical college and kind of how they interact with their colleagues, right? And we have actually full-time doctors that work for us, right? Who kind of are copywriters for us, right? Who help us kind of write copy, right? For some of the content that we put up, right? So I think, I think that's been a big level for top of the funnel content, right? I think in the early days, I think we were, we used to always run these surveys with our customers, right? And like people would love our products, and people would after this would be just like, we just find the content super relatable, right? We found the content to be super shareable, right? And that kind of brought that top of the funnel awareness. The second phase of the growth has basically been, I think we've used a lot of traditional digital marketing mediums like YouTube, right? Which kind of help you kind of reach a very larger base of an audience, right? Medical professionals, their families, their friends, right? And kind of drive awareness. Third is, I think, as you said, word of mouth, right? The interesting thing about medical professionals, Ankur, is that they're very nuclear, they live together, right? If you're in medical college and you're a resident, you're not just staying with doctors and nurses, like all your doctor colleagues. You could basically be interacting with doctors 24/7, right? From your OTs to your OPDs to your wards. And when you see the other person kind of wearing a scrub that you like, the color that you like, you're like, hey, by the way, where do you get it from? I think it also helps that we have Kanya written like boldly on the scrub top, right? But and if you're happy with the service, you're happy with the product quality, you're happy with the delivery experience, you're happy with what the brand stands for, um, I think consumers happy to lap it up, right? Unlike fast fashion, right? Today, you see two people wearing Zara or Zara dress in my office. They may not be super excited. Like, oh, really, you're wearing a Zara dress. Why should I be wearing the same dress? Right? Whereas I think medical professionals don't work the same way. They, in fact, will be like, oh, by the way, this person's wearing Kanye, even I want to be wearing Kanye. It's like a very powerful signaling, right? Status signaling in some sense, right? And now finally, I think stores are working very well for us as well. I think it's a good way to kind of attract those customers who otherwise would not have transacted online. And I think that's another way for us to kind of build brand awareness, along with kind of people going down the funnel as well. But as they pass by stores which are right opposite hospitals, they kind of bring that curiosity. Oh, by the way, what's this brand? What does it stand for? What does it do? It's scrubs. Okay, cool. Let me try it.
So I was going to ask you that in terms of this whole location affair, clearly you will benefit from being co-located in high-density medical professional zones, right? So is that generally how the physical store expansion is playing out?
We launched our first store around a year back. We launched our second store around 7-8 months back. Then we paused for a few months, right? So like around 7-8 months, we paused. We're like, let's see how the retail format evolves. Let's see how the cohorts are evolving. Are people coming? Are people not coming? How the core metrics looking like, right? Like rent to revenue, what is the payback, etc. And we saw some really good numbers, right? We saw some really good progress. We saw good kind of feedback from customers, right? We spoke to these customers, how their NPS was and everything, right? And we were very satisfied. So that's when we felt there's an opportunity to double down on the strategy, right? We do around 400 square feet stores right next to hospitals. The beauty is that hospitals are important, but I think because we are sitting on north of 6, 7, 8 lakh transacted users, we kind of are able to know where our customers live, right? We know where they live, we know what they're doing. right? And I think so that really kind of helps us, right? And kind of we try to leverage that data to kind of open stores and clusters, which mostly, you're right, should be around the medical college. But sometimes you kind of take a bet, be like, hey, by the way, this is like a community of where a lot of doctors and nurses are living. Let's try to put a bet around the store here. We try to open a store of month on this.
What would be fascinating is this whole lens on choosing to go offline is a important question for most brands to address at some point in their journey. Now, you seem to have gone that route at some point. And would you attach this to a revenue milestone, scale milestone, money milestone? How do you decide when is it time to do your first store and then ramp up? Because most brands will eventually saturate online. Sometimes people will attempt offline even before they saturate online. I'm curious, what do you think about that?
I think my metric is not about the revenue milestone. Yes, I think you require some basic revenue milestone, some kind of, but I would attach it to a brand awareness and a PMS, right?
Okay.
And I think one way to track brand awareness is, I think Google searches, I think to see how your search of share is compared to your category is super critical, right? And if you have a large voice of share amongst the customer compared to your competitors, or compared to how the generic keywords are growing, you kind of know that you build some level of brand awareness, right? So I think that's one thing that we look very closely when we knew that we've kind of reached a critical mass of being aware that this brand exists, like what could be interesting to try. Second is, I think as founders, if you kind of have a robust team that's kind of scaling your online business, and in some sense you feel like, your job is in some sense capped, right? In terms of whether it's building out the team, right? Whether it's the performance marketing, whether it's the retention, whether it's the creative strategy, right? And that's when you feel like, hey, by the way, should I try a new product or should I try a new channel? And then sometimes new product just works, right? Because you're like, hey, by the way, I already have everything set. My creative team is ready. My website is ready. My performance media buyers are ready. Let me just launch a new product. And sure, that's totally a fair strategy. But in our category, very clearly, we want to be focused on scrubs. The scrubs brand is a lot that can be done in scrubs. So let's try a different channel instead. And we were like, and at our scale, we were like, it doesn't really kind of move the needle to kind of, launch a couple of stores. It will be good to kind of see how they evolve. Do they do well? Do they not do well? Is the customer happy? Is it not happy? Let's launch a 2-3 stores. Let's learn from it. Let's make mistakes. And that's exactly what we did. And we made a lot of mistakes. And we learned a lot, but we also got a few things right. And that's when we got the conviction to kind of double down on the strategy. The economics worked for us. And that's how we kind of thought about it. But I know that some categories, people look at it like, hey, by the way, you've got to cross the 7 to 10 crores a month mark. And then, hey, by the a month mark, and then you're like, hey, let me consider stores. But I don't think it's like a force fit, right? I think if you look at your category, you have to kind of see how you're performing in that, in that particular category, how much brand awareness you have, how you build a relationship with the consumer. There are some categories that do not really benefit from having an EBO, right? Your physical store, right? There are some categories that do benefit, right? So I think it's very case-based. I would say talk to your customer, right? If customers are demanding it and customers are doing it, then I would kind of encourage you to do it.
Interesting. So, Abhijeet, help me understand something relatively basic. Largely across categories, I've seen this whole shift from unbranded to branded being a macro level theme play out. And I'm sure you would have had these conversations in some formats as well. Is that largely what you see playing out in this category?
I do think as well, right? I think our category, traditionally uniform play, right, is very unorganized, right? I think our number one competition is the unorganized tailor that is looking to kind of stitch scrubs for a doctor or nurse, right?
And that's fabric, I don't know if it matters. I mean, who and where
it matters the most. So fabric matters the
in
most.
In that world, nobody seems to care as much because they're not too many options to start with.
Exactly. So today, the way it works is, we are based in Bombay, so I can give an example of your Bombay basis, right? Today, you have a tailor sitting outside like a parade, will basically go and buy some meters of fabric from Mangaldas market, whatever fabric available to him or her, and a doctor will walk into the tailor's kind of small showroom or whatever. Showroom, I think, is a bit of an extended term, but like a small shop, right? And the tailor would basically take the stitching of the garment, tell them, okay, I'll give you this fabric, I'll give it in 7 to 10 days, right? Now, in this whole 10-minute generation that we live in, to wait for 7 to 10 days to get a garment, now if the fabric is not consistent, it's not really backed by science, right? And when I say backed by science, it's like the least you can give your customer is odor resistant, wrinkle resistant, maybe some stretch, some performance fabrics and make you feel better, right? Today's day and age, like the number of athleisure brands out there, right, and available to you, Today at work, people are kind of wearing athleisure, right? So I feel like doctors who are doing like 24-hour shifts should be wearing things that can help them kind of be more mobile, right? So I think it's a very basic need, right? And plus, I think it kind of from a cost arbitrage perspective, I think it makes less sense to kind of stitch every garment, right? I think when you kind of do it at scale, you can get like pass on the pricing and the costing benefits to the customers well, right? So I think that's how we've gone down. That's how we've gone by, right? And I think very simply today there are lakhs of Indians that go to the gym, but it's not that the gym provides you the garment, right? It's you wear your garment to the gym. So why should kind of doctors be given garments by the hospital, right? It's always not really made intuitive sense, right? You should kind of bring your own garment, wear it, and just follow the norms of the hospital with regard to autoclavable, wash it in a particular way. I think those are absolute things, and I think the fabric technology that we use kind of provide that, right? So
Well, I mean, I would imagine that sooner or some point, this whole institutional sales as a channel or a way to get into business might end up being meaningful. But sure, it's a matter of that journey. So, coming to the whole topic on retention now, in some sense, this whole subject of it's a uniform, which means it's probably used 6 times a week, sometimes five, and you'll need multiple sets, and you'll have some accessories that will go with it. So, invariably, from a acquisition to lifetime value lens, how do you do the math here, and at what point does it start to look okay, this is like I'm breaking even in my first transaction itself versus okay, I'm going to need 2 3 4 whatever. So now this is a point where I'm able to put a lot more fuel to the fire because I know I have that kind of retention.
as a North Star metric, yes, I think LTV is important, but not something that I kind of look at on a daily basis super closely. The reason is very simple, is because we are first transaction positive, right? EBITDA, right? Not CF2, CF3, whatever, at EBITDA level positive, right? So I think that was something which is very critical for me, and I never understood businesses. I'm not against them, but I never put the until that were not kind of post transaction. And I know there are many BBC businesses that per se have that, and they totally work. But for me, I was very clear. I want to pick a category of product that is first transaction or positive. I think it's very simple, right? I think you get the right gross margins, and they say, right, you die with the gross margins, you're one, right? So I think that was the kind of mindset that we started with, right? But retention is super critical, right? Because very often somebody will buy a scrub or a navy blue scrub, buy only one. So you'll see you picking up traditionally like one-ish initially when we first started, right? We did per transaction. And the reason is because they wanted to see the color, they wanted to see kind of what the fit was, how the fall of the fabric was. We got a new brand, people like, oh, really? Can we even trust the delivery? Blah, 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 right? And what we in the early days was like, we were like, our product will speak for itself, right? And I think in some regard, that's super critical, right? But if your product is good, people will find a way to buy you, right? Whether it's on your website, on your Amazon, your stores, they do what it takes and then they'll come to you. But as we kind of, scaled and the trust build of Kanya, we realized that we need to kind of get smarter with regard to kind of A/B testing, with kind of offers, with landing page optimization, maybe nudging the customer at the right time with these whole marketing technology tools that are available like WebEngage, right? And I think they are very, very powerful tools that kind of help you do exactly that, right? Kind of reach the customer exactly when they are in the consideration phase, or right when they're in the conversion phase, and kind of nudge them off the kind of, of the shelf, right? And I think we do all of that, right? But I think there's always scope to improve, right? But I think traditionally my belief as an entrepreneur has been the mother of retention is just giving a robust customer experience, right? And if I just look at the brands that I use on a daily basis, they don't keep nudging me, right? In fact, the products are so good. I've never had complaints in regard to the delivery. I've only had proactive communication if there was a difficulty. So that should speak for itself, right? So at Kanya, we've kind of have this mantra with the customer support and experience team is that we got to be proactive and not reactive, right? We live in this world that, e-commerce operations is difficult, right? You're delivering to thousands of pin codes in the most remote part of the country, right? You're going to have issues, right? Whether it's going to be a flood or there's unfortunately going to be some, some festival, right? There is going to be situations where there's going to be delay. But it's us as a brand who cannot tell the customer, oh, by the way, it's not our fault anymore. You got to go and talk to the delivery partner. No, it's our problem. You got to be proactive. You got to give that trust to the consumer. And if you give that trust to the consumer, boom, I think that's retention right there for me, right? Because for me, retention is trust, right? Because if you've created that trust, the consumer will come knocking by, but they want to trust you that you delivered a product, a good wholesome experience. Same with refunds and exchanges as well, right? It's going to happen in apparel, right? We've been fortunate enough to build a robust product that we have very limited refunds, right? Like really, really a small percentage. But even if people give a refund, it's on us as a brand to give them a really robust return and return experience, right? So if they're going by, to almost make them feel bad for going by, right? And I think we literally refund the customer as soon as the product is picked up. We trust them with the QC. So we've done these small things. I feel where the customer can build more trust with us, and over time can I think be a long-term customer for us. Right now, we see some customers who buy anywhere from like 5 to 7 to 10 to 12 scrubs a year, right? And right. And I think because it's, as you said, it's uniform, right? They wear it for 16, 18 hours a day, right? They keep coming back to work. So it's an important product for them. And we need to kind of build the trust in the first go itself.
So a few things here, right? The first important keyword, which probably is shorts that will come out of this conversation, is this EBITDA positive in the first transaction. Now, I've had a previous conversation with another founder who scaled his company pretty well, and he was like, "I only want to talk math and no English. If it's not ROAS of 2.5 or above, I'm not doing those set of campaigns." In terms of this whole operationalizing of this via ROAS or some sort of guidelines around, how do you orient the team that brand building and all is okay, but I want to operate with this EBITDA positive from day zero kind of mindset?
So, there's this age-old debate, right, that of the importance of brand marketing versus performance marketing, right? And I mean, I think both kind of go hand in hand, right? And both are super critical. And I think enough literature to tell you that brand marketing cannot be measured as well. Performance marketing can be measured really well. Let's stick to the ones that provide us quick wins, junk food, and the proteins and the fibers. And I think this should go on and on, right? But as a brand, I think we've realized that to oil the funnel is super critical, right? We kind of spend a lot of time kind of looking at the consumer journey, and all the way from awareness to consideration to conversion, right? And we feel that if you kind of do not kind of keep building that awareness, you will kind of have kind of a lack of new customer acquisitions coming in, right? So I think that is a huge kind of deal, huge deal, right? Now from a numbers perspective, I'll tell you personally as a founder, I am very data driven. I'm particularly a left brain person. Unlike my other founder who's a right brain person, right? So it's my job in the company to kind of keep looking at numbers on a daily basis. But I am not as anal as being like, hey, by the way, if it's 2.5, let's just stop the ads and let's stop running and things like that. No, I'm not that person. I do understand it takes investment to build a brand. We have investment channels which have been loss making. We have investment products that have been loss making. But as long as my company level EBITDA and company level EBITDA positive at the end of the month or the end of the quarter, that's what I care about. Because I know brand building is not a journey that happens overnight. It does take time to kind of build people in the funnel. And I think there are some categories which are particularly competitive, right? That require to kind of cut from the clutter, right? So I think you got to do that. But as a founder, risk taking is part of who we are, right? So I think it's about you to have that vision to kind of look ahead of the tunnel, being like, hey, by the way, I'm going to reach that, live. But I think I've got to make that calculated call. But one thing which has become pretty clear in the last, I would say, year and a half is I think any kind of consumer brand founder will tell you is that if you're not really profitable early on, or at least profitable, at least like now this is a new term of CM3, right? But whatever CM3 means, is that I think it's important to have that early on because you're not going to others have that 3-4 years down the line because eventually the consumers have to fund your growth. Your investors can give you a little bit of a check early on to support you, but I think that's pretty much it, right? And I think the beauty of consumer brands is they don't require a lot of money to scale. And look at some of the such successful stories in India and in the US that have kind of built brands, bootstrapped, right? And I think that's the way to do it, right? I think today a huge metric, right, is capital efficiency. And it's a metric that I track very closely, right? It's that I think how much capital are you taking to reach what revenue and what's EBITDA, right? So I think that's the way I think about it. I think so somebody numbers driven, absolutely, but not numbers driven to a point that kind of blindsides you. Right, you kind of need to use your instincts. If you think a product's going to work and you think it's a category is going to work and channel's going to work, you got to stick with it. Right. For example, we recently listed on Blinkit. Right, people buying scrubs on Blinkit would have thought, right? And I think early on, I think we were like, let's be interesting. Today it's actually break even for us, which is a good thing. But I think we in the first month it wasn't, and I'm just like, it's completely okay. It's a good channel. It's a consumer behavior change. Let's kind of like stick around with it. Let's see if we learn from it. And I think we're yet learning from it. But I think that's a perfect example where like, why would I kind of miss an opportunity to reach my consumer faster if I can, or if there's a category channel fit.
So in some sense, why the guardrails around EBITDA positivity is still a defining guideline, and I would imagine typically people under pressure to grow faster than a certain velocity end up missing that oversight. What's your lens on pace versus quality? Because in some sense, you're building a quality business being EBITDA positive. At the same time, that might sometimes slow you down. Is that a conscious choice somewhere you made, or how does that play out?
From an average perspective of the industry, I would say for whatever data we have from our investors, I think we've grown well, we've grown sustainably well, right? And I think I'm proud of that. Could we have grown faster if we had kind of given up some of the EBITDA metrics and kind of raised more capital? Absolutely, we could have. But it's not the DNA of the founder, right? Eventually, it's not my DNA, it's not Vanchika's DNA, right? We are kind of people who solve for sleeping well at night, right? And I feel like when you grow too fast and kind of hire way too many people too fast, it kind of, yes, it's amazing and your impact probably is high, but the risk of it falling also increases, right? And some founders are able to do it successfully well, and kudos to them, and all my respect to them. And I'm probably looking at them with awe, who are able to kind of manage the risk and the sustainability. But that's not kind of how we are able to kind of do it. We are believers that brands take time to build. Look at some of the most successful brands in the world, right? Nike and the LVMH group and all these brands have taken decades and decades to build. They've scaled well. And I think there's a time when things compound. And we're like, as long as we grow heavily, and our impact is increasing, but we're doing it sustainably, that's what we want to do. Right? We're not kind of crazily keep adding products and keep adding senior team members and keep adding channels. And I think somewhere down the line, then the focus goes away, right? And I think a devil for an entrepreneur is focus, right? Is to misfocus and distraction. I think competition is there today, and competition will continue to be there. Right? I think that's just how it is, right? And I think these platforms like Meta and Google and YouTube and Amazon, they benefit from competition, right? The CPMs depend on that, right? So they kind of solve for that, right? So I think the way we think about it is that let's kind of be focused on kind of what our metrics are, right? And today, my core metric is product, right? Just have the best product out there. And for me, product is not just like a really amazing product, but also the product and price match, right? We live in India, which is a value conscious economy, right? I would love to have a launch of 20,000 rupees scrub, right? But truth of the matter is nobody's going to pay for that, right? So I got to launch a 2,000 rupees scrub, but yet it has to kind of, in the graph of price and quality, meet in the sweet spot, right? And I think that's as a responsibility that we have as founders, as brand builders. And I think if you do not compromise on that, I think then nothing changes, right? Whether it's good competition, bad competition will keep coming. But if you will live that same sweet spot, I think with scale, you'll keep getting cost benefits, right? I think which we are getting an all-time of gross margin. I know I said you dive with it, but there is scope for improvement, right? So I think that's one. Second is, I think there are kind of guardrails on customer experience. I think however big a new competitor is, however big it is, eventually customer experience wins, right? And that's a DNA as a founder we need to create, right? We have like 25, 30 people who work in the customer support team, right? It's about kind of creating SOPs to kind of give a holistic experience to the customer, right? It could be about refund policies, it could be about exchange policies, it could be about delivery, it's about proactive communication. Yes, sometimes you may not be able to deliver within 24 hours, right? Because there are only so many warehouses that you can have, and there's only so many places you can reach across India. But if you communicate that proactively, right? Boom, I think it's setting the expectation. What is customer experience? Is the difference between customer expectation and the reality, right? Very simply, right? So if you set your expectation effectively, I think whatever the reality is, the customer kind of moves around that, right? So I would say that's number two. And I think number three is, for me, I think is brand trust, which I've spoken about a lot, right? Which is kind of linked to 1 and 2. But I think today, if you look at the legacy brands of Tata and Reliance and Mahindra, they're just being built over decades of trust. Like, okay, if it's a Reliance product, it's a Tata product, we trust it, right? And I think look at it, new brands like Kanya are no different, right? It's been 3 years, and I think we've been able to build some trust with the consumer in a small way, but we've been able to build that trust. And by the way, there have been people who ordered from us 15, 20, 30, 40 times, and who spend lakhs with us, that are individual customers. right? Because that sense of trust has come, right? That, hey, these guys will deliver. They have a store. I like their product. Even if the product is not good, they will figure it out for me, right? So I think that lens of competition in some sense is a kind of myopic, right? Because in some sense you are your own competition, however kind of cliche that sounds, right? But we've tried to focus on our kind of game of kind of focusing on these three things, keep innovating the products, keep kind of providing holistic experience, and kind of keep focusing on how can we build more trust, right? So that's how we are.
So by design, if I were to say this is a message for a D2C founder considering a business today, talking about identifying a meaningful niche which has a decent size, the need gap which is substantial, wherein the alternatives are at whatever subpar quality, you can offer a superior product experience, and then obsess over the whole customer experience and build trust. You should be able to build a decent sized business while remaining disciplined with profitability and all
Absolutely
in check, right? That's the
You're making
message.
it sound easier than it is, but yeah,
Of
absolutely.
course, I'm not. I'm making it simple, not easy in some sense. I'm making it.
No, I'm kidding.
The choices of
simplifying it, yes.
what founders make are often distracted by what they feel is the right thing to do and what they've seen somebody get away with, right?
Yep.
Because this whole getting away with it business has happened in a lot of startups where they've
Yep.
scaled up substantially and then had to scale back and things didn't work out and all of
Yep.
that happened. The mortality
Yep.
is the right story. Coming to the core topic where we talk about retention from a marketing lens. Now, would love to understand when you look at retention, you mentioned the dimensions around refunds, returns, operational experience, delivery experiences, product quality experiences. All of them add to this whole subject of whether people are coming back to buy or not, right? If somebody's tried a product for the first time, invariably the biggest draw brands see from that point onwards is from the first to the second order. Once somebody's got from first to second to third to fourth, now you know that they like it, they have a good experience, and they'll continue to come back for more. So then this boils down to, okay, how many are they buying per quarter? Maybe they're adding some more things per quarter. So you're solving for ARPU, not so much for retention anymore. But from the first to second to third to fourth, you're still solving for retention and trying to identify patterns, draw insights, and then solving for them incrementally so that you're able to get better with each subsequent path of acquisition, because that's ultimately helping your profitability, right? More people repeating at lower costs should ideally let you fuel your growth faster. So help me understand, how is this organized? How is the team set up? What kind of, let's say, processes have you put in place? What kind of data comes back from these conversations, and how do you then use that for decision making?
We have a growth team which kind of looks at acquisition, retention. That's how broadly it's divided, right? And within retention, you have somebody who leads retention, who works closely with the growth manager. And then you have a campaign executive person who kind of sets up all the campaigns. And then you have the creative team that works very closely with the campaign, with the retention team to support them in kind of what the communication should be, right? If we are probably launching a new product, we want to send out an emailer. What should the communication angle be? It should be married to what we're doing on social media. It should be married to what we're doing on performance, what we're doing at our stores, etc., etc., etc. I think this is traditionally how a lot of brands kind of structure it. Little bit tweaks here and there, I'm sure, from brand to brand, right? Since we have a lot of transacted users, for us, retention is very critical. We kind of keep looking at cohorts, right? First month cohort, 3-month cohort, 6-month cohort, 9-month cohort. We have kind of one source of truth, because today, as founders will realize, right, you have Google Analytics, you have Shopify, you have the your MarTech tool, which is like WebEngage, right? There are like multiple kind of sources of truth, right? And it's difficult, right? But I think somewhere down the line, you need to kind of define what is the kind of first-in-class make, what is the source of medium you want to look at, and let's continue looking at that as an apples to apples. And then we have an analytics team as well that works closely with our growth team, which kind of spits out reports to them on kind of, hey, by the way, this cohort has gotten this AOV, is performing this well. Why don't you consider this? Why don't you try this kind of offer? Why don't you try this kind of communication? And so that's how the analytics team and the growth team kind of work together. That's how we have it at Kanya. Again, I don't know if it's right or wrong. It's
no, I mean, I would look at it from a scale of evolution. So in your impression, there is a journey from 1 to 10 as far as maturity is concerned, 10 being nirvana, and I've not seen anybody there yet. But in your own assessment, where do you feel you are, and what's your next big milestone in that direction?
From a team perspective, or from a
priority lens, right? I mean, maturity perspective. So I'm, if I were to talk maturity, I would apply scales of how much is the automation involved, how much personalization there is, how much is there, no dependency on humans per se. That even if somebody doesn't come to office for the next 7 days, there's a whole bunch of stuff that's happening.
So I would say we are somewhere in between. Actually, we are somewhere in between. I think if I do kind of rewind a year back, I can't even recognize the organization systems, right? I think I was personally involved in a lot of stuff, right? Which today, like, I am significantly less involved, right? I think that's my definition of it. A lot of systems have been built, a lot of technology is being used, a lot of kind of people are built that even if kind of the lead retention market is not there, yes, the work goes on, right? There's a team that can support, right? So I think we're somewhere in between. I think, but we have a long way to go, actually a long way to go and kind of, servicing the customer and kind of leveraging kind of analytics and tools to kind of service the customer even better, giving them a better experience and nudging them better, right? So I think we're somewhere in between is what I'd say.
So I'd love to understand, let's say, a few questions that can come to table. Now, I see, we work with a bunch of companies, and one of them being a beauty products brand. The person tells me offline that, this brand of lipstick or this particular set of products had a terrible NPS and terrible customer feedback, but now I have 100K of them lying around. Now, as a retention professional, I'm going to tell my operations team to get rid of it because it's hurting my business. But at a business level, sometimes these calls can become difficult, right? In your world, I'm guessing since the catalog is small and very well curated, you might not have similar issues. But then you'll have other kinds of issues which are hurting your retention. Let's say you have tier 1 cities and tier 2 cities. Tier 2 cities have more, let's say, delayed deliveries. And that's why your retention for tier 2 cities is poorer. Now, who brings this to the table? How do you take this to operationalizing?
So I think we haven't kind of dealt with this as much, because it's a very kind of niche category, right? I can't even imagine some brands with large SKUs having to deal with kind of the nuances, right? The way we work is we have NPS is kind of owned by the ops team, customer service and the retention team, right? They kind of sit together and be like, hey, by the way, we're at this number today. Then we'll kind of look at the unlikelies and then be like, okay, what are the unlikelies for, right? And then we will kind of map it out by was it a product issue? Was it a delivery issue? Was it a customer service issue? The customer service issue. Okay, let's answer that. Let's answer that communication. What was the CSAT for that communication? Then we go back into the voice recording, like, hey, by the way, okay, the greeting was not good enough or whatever, right?
So if it's the retention marketer and the ops team doing a deep collab on making this better. Is that what we're saying?
Exactly.
Right? That happen everywhere. These two are operating in their own worlds in a lot of places.
And I'll tell you, we aren't perfect in this, but I think today, after a lot of kind of extreme focus from my angle and Vanshika's angle, we as sitting in our chairs sometimes rarely know. It's tough sometimes to figure out how your customer is really doing. Because I think today your website review and these are not really kind of giving a real picture on kind of how is the brand you're doing. But if you're getting like 1,000, 2,000 kind of, responses from a customer on the NPS and how likely to recommend your business, your brand, your friend, right? Likely, unlikely, neutral, right? And then what our analytics team does is they basically take these responses, map it on like 6-7 things, right? Was the order delivered, dispatched on time? Was it delivered on time? What was the review given on the website? And then we somehow able to then we also kind of, that's a new thing that actually the analytics team do is they basically count the number of times a particular word is used. Example, refund is used, for example, more than the average, and I go, this could be a refund issue. This was like, fabric, it could be a fabric issue, or it could be a positive fabric, right? So sitting in our chair, we kind of know how we're doing better. Are we kind of pushing the buck to do even better? Or we're like, we know these plateaus are here and we can't do better, right?
So my contention with that being, NPS, while it's a great metric, ends up usually having poor coverage. You'll have 5% of your people responding.
Fair,
right? So the remaining 95, you're still in some sense guessing about what the experience was and whether they'll repeat or not, right? So how do you understand, predict, solve for those?
So I'll tell you what, and it's a great question. Maybe I can learn this, right? But I'll tell you what we do is, you're absolutely right? We hear from we hear from maybe 10% of the customer, right? Or 10% on NPS, and another, like say 5-7% on other reviews and other kind of maybe other customer support. Balance 80% we don't hear from, right? What we do is from a churn perspective, when we see customers who are churning, we physically pick up the phone and call them. Not all of them, impossible to call all of them, but we call a few, we call a percentage of them, try to understand where they're from. And we're like, by the way, I actually just don't need the product today, right? Or I'm leaving the country, right? And or some will actually give something really real, right? Okay, by the way, I like another competitor's product, or I kind of really like your product, but I just don't need anything anymore, right? And that will kind of help us gain buckets. But I'll be honest, after that also, I don't have all the answers. I can't tell you one word.
I think that's where the whole journey to maturity comes in, Abhijeet. So not being judgmental about it, because for us, it's a matter of your journey of 3 years, having been a successful brand, build EBITDA positive, ton of wins there. So as far as retention as a subject is concerned, of course, it's a maturing curve, and you'll discover some of these things. You'll learn from peers, ecosystems, and brands that support you. But that's where a lot of room to solve is where we see the opportunities. And the part I was trying to understand from an org lens is because if the retention guy has a seat at the table where decision making happens, then he is also, in some sense, mandated to bring out all these insights and bring them back to the table. That's what's hurting retention. Tell me those 20 things, and somebody is going to solve to fix it. Otherwise, the challenge with most brands, and that's where I was telling you that this team, which is supposed to be a marketing team, or let's say CRM marketing team, sometimes it's called, is an email marketing team. Just blast emails, get revenue. That's all. Nothing else matters. So retention ends up being nobody's problem if you think about that. And I've seen this across multiple organizations, and they don't really look at the customer's life cycle in a meaningful way because they're happy blasting emails and getting revenue every day. So I'm curious, what is it in your world yet? And now it's a journey. Of course, you might choose to evolve and make changes as you go along, but how does it look at the moment?
No, so I think for us, I think it's a work in progress, and I think we absolutely made progress. I think we solved some of the things that you said in a small way, but can we get better at it? Absolutely, we can. Right? I sometimes don't even know did my customer buy from me and go to Amazon or go to my store I can track, but like Blinkit, right? And it's impossible for me to know because in my kind of tool will tell me that, oh, by the way, they churned, right? And even if I call them up, they cannot pick up my call. Right. But I think we've kind of built a team which kind of has ownership with regard to it, not just the customer support and ops team, but even the retention team kind of has an ownership on kind of how the product journey is evolving, how kind of right from the ad being shown to them to servicing them for them to come back. Right. But can we do better? Absolutely, we can. Right?
Tell me something, Abhijeet. As a founder, in terms of things that you would have cared about solving for better, which of these are still unsolved problems?
So I don't think it's a tool thing, right? I think there's plenty of tools out there, and I think some solve a lot of it, and maybe unfortunately there isn't one tool that fixes everything.
Which is the reality. What would be that perfect situation look like? And not even specifically
I think attribution is a serious issue. Yeah, I think attribution is a real pain, right? I don't think it's a retention tool perspective, right? It's all the way from Meta to your Google to your YouTube to your Twitter X to all the acquisition channels to your SEO, and like there's just like so many channels to it, right? And today, we cannot, and I think we are not able to tell beyond 70% or 60% also kind of from an attribution perspective, right? There's a serious gap. Right. So I think that's number one, which I think for me is a big item, right? I think if we can solve that. Second is, I think is because we are omnichannel, and I think every brand is omnichannel. There's nothing like a single channel brand today, right? Some will have some concentration. It kind of retention gets even harder.
Yeah.
Right.
Tracking retention gets harder, right? Because you don't even know if that guy's actually churned or is repeating from a different channel.
Yeah. Exactly. And it's not really practical to keep reaching out to customers, right? Like we are talking about 5, 10, 15%, I think these are good numbers, right? I think beyond that, it's very difficult to really call up the customer. And you think Unilever and Nestle are calling up the customer, like, no, where do you buy from? No, right? I think we are building products. What happens. I think we've already made progress a lot, right? When I say me, I think we all as a community built a lot of progress to kind of trap the customer journey, right? So I think that's how I think about it, right? I think these few things that kind of make it a little bit more difficult for the founder. Right. And kind of, I think that's where the math kind of goes out of the wall. Because you're like, okay, by way, how do I even know if the customers churned or not churned? Because by way, my Amazon numbers are doing great, and my P numbers are doing great, right? My GP numbers are doing great, my general trade numbers are doing great. So what does this mean? Right? At least we are a brand that's very online focused. We have our own store, so we can track a lot of it. But you have today FMCG brands who are not even relying very much on, they're primarily relying on quick commerce and general trade, right? So it's even harder.
So with these offline and online stores, are you at least stitching together the customer journey? Somebody who was buying earlier online and now he's going offline? That's clear. Right?
So because of the POS data, I think it's fully available to us. So we try to capture around 80-90% of the customer information at the time of purchase. So we kind of know who's buying. Are people going from online to offline? Are people going from offline to online? Are people keep coming back offline? So we are capturing a little bit of which we have a little bit of idea.
Awesome. And in terms of just the pattern around channels, now you have your own offline, you have your own online, and you have Blinkits and the Amazons playing out. In let's say 2 years from now, do you have a view on how the channel mix would look like for you?
I think stores will be an important aspect, right? I think in a couple of years, the hope is to have 50, 100 stores, depending on how well we can execute. And it totally depends on how we execute as a team. If we execute well, we can. Or if not, we'll kind of be where we are. Right. I think our own channel will continue to be a very important part of that. Our website, our app, our stores. We will, of course, leverage third-party kind of marketplaces like Amazon and Flipkart and maybe other general trade, but I don't see them being kind of a big drive. Right, exactly. So I would say these guys, our stores and website will continue to be 70, 80, 90% of ours. 80%, I'd say,
80%
85%.
by design. Okay, that's, I mean, in some sense, that sounds like a conscious choice made because you'll appropriate your investments in the same manner to make
Exactly.
sure this remains in a certain fashion. I heard doctors as copywriters a very fascinating piece in your journey, and I've had consumer brands which have literally 6-7 room studios in their own office premises because they just believe so much in content. Right? Help us understand how this is getting played out, and is this something that you expect to continue investing in?
Content, absolutely. I think it's super critical, but it's commoditized and very competitive to kind of keep kind of scaling on these platforms. So I think it's not something top of my mind, be like, hey, I want to become like the number one content creator brand out there. No, it's a very competitive, it's a commoditized skill set. But I don't think as a brand, yes, content is super important to us. We have a lot of content editors there, we have a lot of copywriters, a lot of graphic designers and art directors, all these kind of amazing talent out there. But we are building a brand. We're not building a content creator agency.
Sure.
Right? I think there's a big difference here. I think brand
So you
in
draw
some
a line.
sense is exactly, a brand is a marriage of all these things, right? And eventually the quality of the content is important, but the distribution is arguably equally or more important. Right?
I mean, boils down to economics for me, because if you're looking to scale with a certain cost element and organic distribution plays its own role, that's where I would probably do the math on how far do I go with content. But that's what I was curious in terms of your, let's say, going forward
No,
plans.
so we have a lot of content and I've been investing a lot in content, but are you asking me if I'm going to kind of build an entire building of just content creators and like, no.
It's always going to be a business function. I'm trying to understand
exactly.
From the path of growth, like you mentioned, right? There are more products, there are more channels, and there are more, let's say, expansion plays within the existing system. So as far as the digital ecosystem is concerned, in order to ramp it up, let's say, whatever the next 5 years of growth plans are, you will have dimensions as to, okay, this is largely what I expect to do in performance. But since you mentioned this whole aspect around own channels being huge for you, so new channels will not really, I mean, Amazon and Blinkit will not take the dominant mind share from you in some sense from a marketing lens. Right? Because even those platforms will have their own needs to market after a point that you can't be there without marketing and expect to scale up. So I'm trying to understand that when you orient your growth goals, how does it look from a marketing mindshare allocation, spend allocation, energy allocation?
The interesting thing to like to correct there, right? I think the beauty of these third channels is that when you spend a lot on top of the funnel, right, on your website, you automatically see a big uptake on kind of these channels, right? Because eventually brand marketing is brand marketing, right? And you automatically see brand searches on these platforms. Interestingly, before we kind of launched on Blinkit, we already had a decent number of brand searches on the platform. And that's what kind of gave us conviction like, why you should launch. It's because of the hard work that you're doing here, right? No, I think my focus the next couple of, next couple of quarters is pretty clear. I think it's kind of adding more stores and adding a couple more, one more category is what I'm saying on our website. I obviously find it very hard to think beyond those few quarters. However, I'd like to, yes, I absolutely want to kind of, focus on these two things. And I take I would say 1 or 2 quarters at a time. Beyond that, I honestly I'm not a public market CEO yet.
Not yet there, so it's okay.
Hopefully, I don't know, right? And I think I would love to kind of improve as a founder, as a leader, and as a management kind of, individual to kind of think that far. And maybe I require some coaching and learning to the process. But from where we are, I think the focus is very simple. I think add a category, kind of completely focusing on stores and just do things that I'm doing, and then we take it from there.
Awesome. I think a very suljava word as I would use in Hindi to kind of build a brand and play out. So very impressed and inspired by your story, Abhijeet. Thanks so much for doing this. A lot of elements for playbooks so that people in the founding ecosystem and startup marketing ecosystem could learn from. Thank you so much.
Thank you so much, Ankur. Appreciate it. Thank you.
If you like what you see, if you like what you hear, you want us to host more such conversations, you have guests that you want to recommend, do write to us at sormpodcast@webengage.com. You can like and subscribe to this channel to always get the latest that's happening in the world of retention marketing. You can also recommend us guests and give us more feedback on sormpodcast@webengage.com. We are on YouTube, on Spotify and Apple. Hopefully, at all of these places, you can consume us.